GM friends, and welcome to the future of gaming. You're listening to our weekly blockchain gaming rollup. We are recording this on the 16th of September 2022. We've got Philip Collins, we've got Devin Becker, we've got myself, Nico Vereecke, and today we're discussing the big news in Web3 from this week, the Ethereum Merge. Ethereum went from proof of work to proof of stake. What does that mean? What the hell are these things? What can we expect? We're going to talk about NFT sales, NFT fundraisers, and related business models, because we had a question from one of our DAO members about that. We're going to talk about BLANKOS block party that launches on the Epic Game Store, and then Ubisoft backpedaling on their NFT strategy. And then maybe there's some other interesting stuff that comes up that we can discuss. Let's dive into things. So hey, welcome Phil and Devin. First of all, the merge. So what happens? And I saw a great analogy about this on Twitter, which was essentially, imagine you have a car, and the car is driving. So the engine's on, the car is driving down the road. It's driving, let's say, 70 kilometers an hour. It's not super fast. It's not top speed, but it's going, right? Everyone's using it. Like there's this so this car is Ethereum basically. Ethereum is a blockchain that's being used, right? People are submitting transactions. There's shit going on, and the Ethereum car, the original Ethereum car, had like this insane V8 engine, which was making lots of noise, but also consuming lots of fuel. And the idea was, okay, we want to make a hyper efficient, Tesla electric engine in that. But one of the problems is there's a lot of people making use of this car, so we can't stop it. So we need to replace the engine of this car while it's driving without anyone noticing, without stopping. And essentially that's what the merge was. So you had the proof of work, which was the original consensus mechanism, was using lots of energy, as everyone knows. Everyone was hating, and every time you minted an NFT, you were basically burning down half of the rainforest. And so that everyone knew that was unsustainable, and there were actually mechanisms built into Ethereum to force it to go towards proof of stake. And proof of stake is way more efficient, way less energy consuming. And so the merge happened this week. So the people, all of the nerds working on this, all of the brilliant engineers working on this, effectively, while Ethereum was running, they managed to change the consensus mechanism of Ethereum from proof of work to proof of stake. So they essentially changed the engine from a V8 fuel guzzler towards a very efficient electric engine. Did you guys celebrate?
I was sitting there waiting, and then when there was 2 hours left, I forgot, and then a couple hours later, I was like, oh wow, it happened. Okay, cool. But I was Googling around for Panic, looking for any news stories about more people freaking out or anything like that. It felt like Y2K a little bit. Yeah. You remember when Y2K happened and you're kind of waiting, you're like, is everything going to explode? So I was definitely that kind of vibe.
Yeah, it was almost interesting how easy it was to miss if you weren't paying attention, because I didn't see a lot of chaos around it. And I think there was a lot of anticipation to Devin's point around what could go wrong, because it is trying to solve a pretty hard problem, to Nico's analogy of changing the engine in a car while it's going down the highway. So I was pretty surprised at how quickly, efficiently it just kind of came and went in a lot of ways.
Honestly, it was 2 years late. So I'm not as surprised, more pleased, and I was a little worried, but at the same time, I'm like, come on, man, you guys have delayed this so long. You better go so smooth at this point.
Yeah. It's a good thing. I think, we tend to, I think there's actually a significant amount of important things going on chain that we don't talk about enough. If you're not able to extract your NFT from a game onto the blockchain and sell it on OpenSea, that's not that big a deal, right? Mm-hmm. But I think there are some more essential economic activities being done on the chain. I should probably have some examples for this, but I don't on the top of my head. But there's shit going on that's important. Phil, help me out here.
No, and I think it's a great point where this is in a lot of ways, I think, a validation point that should get a lot of, that will hopefully, or maybe get a lot of people more comfortable with storing that type of data on chain. So I'm thinking healthcare data, for example, and storing that on chain. Your backend systems, if you're dealing with that kind of that kind of security, privacy risk, and the importance of that data being constantly available. That just can't go down. And so I feel like with blockchain still being a relatively new technology, there is a lot of hesitance to put that on chain. But I think as the technology continues to prove itself out, things like that can start to move that direction. And I don't think this is necessarily like a proof point that will make that happen overnight, but more of these proof points stacking on top of each other will push in the right direction.
Mm-hmm.
Yeah. It's good to see, like, something actually working out for once. That's like a big deal. It was not like, it was a good moment for all the people that love to just complain about every single thing about crypto to like not have anything to say for half a second. Like, I'm sure they were scrambling for something else to cry about. And it was just like, oh God, we got to find something else to be mad about for 2 seconds. So it was almost like a moment of silence, on the internet.
Yeah. Silence the haters. So for me, there's two things that are interesting here. The first one is that from this point, the total Ethereum supply, or the Ether supply, so the amount of ETH in the world, is deflationary. So, which means that every block there is more ETH burned than there is emitted. One of the reasons for this is that proof of work mining uses electricity. Electricity is expensive. And so, the Ethereum blockchain needed to pay miners a lot of ETH to actually incentivize them to actually, validate transactions and make the blockchain work. And now that we're at proof of stake, the amount of ETH that is required, like the cost of mining is way lower because you're not using electricity, or as the network grows, you're not using more electricity. You're essentially like you're hosting a node, which is very energy efficient, and you're essentially putting, you're using a number of ETH, your stake, to actually validate transactions, and you put it at risk, so it keeps you honest. And so that is way more energy efficient. But so ETH is deflationary, which a lot of people were saying, like, I don't know if you've seen this meme of like ultrasound money, right? Where ETH is a better currency than Bitcoin. Bitcoin is capped at 21 million. Ethereum now has peaked at around 120 million, but it is deflationary. So every minute there's fewer ETH in supply. So theoretically, if all goes well, the value of ETH goes up. So that was the storyline of a lot of these Ethereum maxis. So one, deflationary. And second, and this I found pretty interesting, is that people had calculated that the global energy consumption will go down by 0.2% because of this. So global energy, that's like...
It couldn't come at a better time considering all the energy problems, especially in Europe.
Also.
Good timing.
Yeah.
To be fair,
I'm curious to see what the next iteration of, I feel like environmental concerns were always such a big pushback from the general population. I'm curious to see what takes its place from a pushback perspective on crypto more generally. Obviously, we know that there have been plenty of proof of stake solutions out there that are a lot more environmentally friendly than ETH layer 1, but this is a pretty big hit to that argument. People
will still make it though. Let's be honest. There's a lot of people that have no idea the details and will just repeat whatever they hear. And it probably will take quite a while before people stop using that same argument anyways. But it's like, it's about time, because like, it wasn't that it was like people were arguing that blockchain necessarily was the problem. It was like associating with NFTs that was the problem. Like NFTs are destroying the environment. It was like a big knock against like the way people associated with NFTs. And to be honest, I think a lot of people are being disingenuous, because I think a lot of people touting the environmental argument weren't the kind of people that normally care about that. I think they were just looking for something they could use. And to Phil's point, like, what is that going to be replaced with now? Because it wasn't really something they genuinely cared about. Like they'll play on their super gamer rig, with their 3080 Ti that's like burning up a forest worth of heat, like that could heat their whole home without actually even turning on anything but the computer. And they're worried about like, oh, what Ethereum's doing. So it's very disingenuous, but most of the time, and then not everyone, there are people who genuinely care, but I think it will be good at least to knock one excuse off. But it's not like excuses around free to play ever completely went away, for, to use kind of a parallel, right? Like people will still kind of find other things to argue about it or be upset with it. And I don't think it's going to convert many people, but at least, like you said, we can just be like, all right, well, shut up about that one, then let's move on, kind of thing for them. And It is also good for the environment. So I guess like I'll be honest, I didn't care about that much, but it is a good thing, right? It's not, but also more importantly, it's potentially speeding up transactions and requiring a lot less actual work to be done to do those transactions, and therefore potentially allowing for a lot more growth opportunity. And considering we want NFTs to have another big boom potentially, ideally tied, with games rather than just art, but this will help facilitate that, I think.
When you say we want a new NFT boom, what do you mean by that?
Well, so we know we had this, like we had the 2017 and 2018 thing, and then the crypto winter. So that was like one kind of big boom, and then like, quiet for a while. And then we had like the 2021 into 2022 boom. And that kind of, has cooled down. And it's like, obviously we need some hype cycles to get people, like the general public, involved in this stuff, because the general public doesn't care that much about these future technologies and cool things. I mean, obviously we have, somewhat of a listener base here for the future of gaming, but they don't always represent the general public. And the general public pays attention when there's something big going on that they should be part of, and the FOMO and all that. We don't want it to be repeated, but we do want there to be some excitement again. We don't want people to like have to like take 10 years to slowly get into NFT gaming again. We kind of need a little bit of gas on the fire again at some point.
Yeah, hopefully that gas this time around is just not about price appreciation and liquidity.
Right,
I think
greed.
but
that's what gets the most attention.
Isn't that what Devin's exactly? This was my question to Devin, right? Isn't that what he's saying? For me, there's two booms. It seems in my head, there's two possible booms. One is a small supply of NFTs, like exponentially grows in value. But then the problem is that for me cannot build a good game. Like you cannot build a good game around a small supply of very expensive assets, right? And so for me, a boom, like a better boom would be that the number of NFT explodes and they actually get used, but they're not necessarily all worth that much. Maybe to some of them is worth much, right? But then the problem is, I guess, like you don't have that much headlines around that. It's less interesting.
Right. And that's what it comes down to. It's like getting public's attention. Greed is a great thing that gets people in, but it's not a great thing long term, but short term it gets people excited. Because it's the FOMO thing, right? Where they're like, if people are making lots of money doing something, honestly, that's what partially built the internet, is people being like, people didn't care about the internet. And like, you remember the way nerds were treated prior to the internet being a big success, like prior to the .com thing, like, you know, these dumb nerds, whatever, like that sort of thing. And then that changed when it was like, oh, these rich nerds, like people suddenly like cared and were like nice to nerds. Like, dude, that guy could be the next whatever. Like he could be some rich website maker. Like, you know, people didn't give a crap until like the people were rich off of it. And it sucks. We kind of have to go through that, but people have limited attention, right? Like there's limited attention. There's limited capacity for news bandwidth that people have. And as much as it can be detrimental to have these big boom and bust cycles, they also build out a ton of infrastructure, draw a lot of investment, and a lot of things that do come successfully out of them. Even if a lot of people fail along the way, lose money along the way, like without the .com crash, for example, right? Like we wouldn't have had the .com boom, you know, like that built most of the internet, that got most of us online, that we can have this podcast right now, had we not had people throwing money after bad ideas too. It sucks it has to go that way, but if people have limited capacity for doing smart things, sometimes I'm going to make them do some dumb things too if it helps things move along. Yeah.
I mean, I do wonder if the point on when people see the rich nerds, they get really excited. I still think even in this world, the quote unquote rich nerds will probably be, in our case, the game developers themselves that are creating really compelling experiences.
They're like movies, right? And movie plots where they're like the big game designer who made this thing, like Ready Player One or these other things.
Yeah, and so I think that will attract people, and who knows, maybe like, again, going back to Limit Break, there's something about the whales attracting people where it's like, oh, this wallet has $500,000 in it. I should pay attention. Maybe I can trade my $2 NFT to something really impressive. But I think, to what Nico was saying before, I'm hopeful that the next wave is maybe more about like volume adoption, where owning a $5 NFT is really cool and within the right experience, versus kind of just hoping everything 2000x's and you come out with a bunch of money. And I think there's an opportunity that with the types of games that are hopefully in the pipeline, or that I think we're seeing in the pipeline that are maybe not announced or just have a lot of time left to go, that will drive the volume adoption. And I think that the volume adoption will be a much more sustainable boom than what we've seen over the last
Right, but to go to the
12
limit
18
break thing,
months.
like obviously that pushed like Game of War Fire Age. Look what that did for free to play as a model. Like how
Yeah.
fast that pushed that model forward. I'm not arguing like this is a good thing necessarily. I'm just saying like sometimes it's a little bit of a necessary evil. And to your point, I agree. Like I hope the next cycle is focused on something else and brings the NFT stuff along with it in a good way, and something else can boom and bust, right? But it like helps, you know, the next thing. Like 'cause NFTs were like a repeat of the ICO boom, right? Like that big sort of boom and bust around tokens. So it wasn't like the same thing, right? It wasn't, I mean, tokens were still part of it, but it was more like, oh, it was hyping up NFTs and tokens kind of got dragged along. So the next one will probably be hyping up something else and tokens and NFTs will get dragged along, right? Like, because people don't necessarily want to get excited about the exact same thing again. They want something like similar enough that they can kind of understand it, but different enough that they don't feel like they're going to get ripped off again, even though they probably will. Yeah, because they kind of convince themselves, oh, this time will be different.
Yeah.
What do you think the effect will be of ETH L1 going, you know, carbon neutral is probably not, that's not the right word, right? But going like not as forest burning as it was before, on big companies, big publishers, big developers' involvement or like taking NFTs into their game, right? Because I think there's a chance that the global thinking around NFTs like shifts away from the like it seems like every time any big company has touched crypto, they had to like every page had like this is carbon negative or whatever, right? So this was a big point that they had to emphasize. And so do you think this might lead to some easier acceptance, more
I don't think it was caution sort of thing. I think it was virtue signaling at the end of the day. I think they were doing it more as a way to say that they were better, not as a way to say like, oh, don't worry, we don't have this problem. And so I think they'll just move away to some other reason to talk about it. I don't think they go, oh, we're using Ethereum now that it's proof of stake, everybody, let's all celebrate. I don't think you're going to see a page about that. It was more like they were picking other blockchains and going like, our project's different because of blah, but like virtue signaling it, where they're trying to do it in a way that it gets attention or gets people like to think different about it. And I don't think you can do the same about Ethereum. Like going back, like you can't go to an older chain and be like, it's different now, it's better, and like tout it the same way. And so I don't think it works as well as a marketing ploy. So I'm sure we'll see it mentioned now and then, but I don't think it's going to change like game developers' marketing thing. I think there'll be something else. As Phil was saying earlier about, replacing that argument with something else, we'll probably see some other thing that becomes the sort of like marketing point or thing. And who knows what that'll be. Like we've seen a little bit of that already in other areas too, where we went, oh, it's not play to earn, it's play to own. And those other shifts we've seen where people shift like to a different way of saying it or whatever. And I think we'll see those kind of shifts where they'll like, whatever the next argument is, oh, NFTs are a ripoff because if, whatever about the NFT, like, we don't own it, or then people will play off that instead, right? And I think ownership might be the next big one, right? Like where people go, oh, I don't really own it because it's just pointing to it. Or these other kinds of arguments, they'll be like, oh, well, but our thing has the metadata on chain instead of like pointing, like those kinds of things. That'll probably be the next sort of like marketing ploy for game developers, is to find the next problem to use as their banner, essentially.
Yeah, I think like the environmental concerns, using that as a specific example, were just one thing that large companies had concerns about integrating into their process flows. I think still today the biggest thing for any big brand that's considering getting into this space is, I think, the user experience side and just onboarding. And they are reaching probably a small subset of their target audience by integrating Web3 features today. Just because it still is not the easiest way to transact in the world, right? And I think there's a lot of people working on these problems, but until those are very clearly solved, I think a lot of brands have no real consequences or downside from kind of waiting and seeing. A lot of the companies we deal with are trying to use the wait and see strategy to their advantage and say, we're going to be on the cutting edge and we're going to be there before a lot of these bigger, slower brands even realize what they're missing out on.
Right.
But I think for now they can kind of rest on their current models and say, like, until the user experience is better, until this makes sense for our user base, we can just kind of hold out. And regardless of what happens, I think there's an onboarding challenge that needs to be solved.
This kind of brings us into one of the points we were going to touch upon, which is Ubisoft.
I was thinking that as well.
Mm-hmm.
So, what's happening? Who can describe this the best?
Yeah, so at a high level, Ubisoft was I would say the most aggressive AAA game publisher that really entered into Web3 in a big way. They did it back in December through their Quartz NFT program, implementing it into Ghost Recon, and it was a big deal, right? I mean, we hadn't seen IP of that scale even try to touch NFTs. I think in execution, it was what I would call underwhelming. It got a lot of press up front and really tailed off very quickly. I forget the numbers of NFTs that were sold through Quartz on Ghost Recon, but it was extremely, extremely low. Like I would say negligible.
Like less than 100 or something.
Yeah, it was something crazy
insane.
like that.
To be fair, I wanted them. It was just too much of a pain.
And so for all of the hype and all of the hate that Ubisoft received for it, I think in execution, it ended up being written off as a failure very quickly. And Ubisoft went semi-quiet. They continued to announce partnerships to improve their program, but at the end of the day, like that announcement was kind of their big hurrah into the space. And over the last few days, some articles have come out talking about Ubisoft CEO determining and saying that Ubisoft is currently in research mode on NFTs and blockchain gaming. I think that's a nice way of saying we're looking into it, sort of, but not really doing anything right now. And so it's a pretty big confirmation of a 180 for them. And I do think it is probably going to be a little bit of a hit to other AAAs that are exploring this space, where like that is the best peer comp they have. And I think their efforts to date have failed pretty catastrophically. So yeah, it's interesting to see the big brands, initial experiences, and I think there's the user opposition and just the difficulty in onboarding that's continuing to cause issues from a adoption and sentiment standpoint from the average consumer or player.
It's not unlike Ubisoft to jump into new areas and not do that great. Like, does anyone remember most of their VR stuff they made?
Nope.
No, exactly. Like they've definitely dived into areas because they like to stay cutting edge as a company, and I think that's a great thing for them, especially as a company that's so bureaucratic, has so much trouble, like improving their processes and doing all those other things. That at least they have these R&D projects that they're willing to throw money towards learning new stuff. It's funny because a lot of times it doesn't trickle very well into the rest of the company, but like they do at least push that stuff, and it wasn't really just like the Quartz thing. If you actually look at Ubisoft's spend and what they've done and stuff, like the Quartz thing was such a drop in the bucket compared to the rest of the stuff they've done. They're invested in so many games and so many like blockchains and other things that they've actually put money into that people just kind of like see once and then forget about that they were involved. That's like an area where they've been really helpful without getting the backlash the same way, right? And so I think that's like their way of thinking, like, well, maybe that's what we should be doing right now, is like backing these things because we're not getting backlash from doing that. And then at some point, maybe they go and publish a game. Like they don't make it themselves. They find a really good blockchain game that someone's made that already has like a good community or something. And then they just publish it. And then they go, okay, that's our way in, as like a sort of like cheating way into it that like doesn't, because the problem is they are so leaning on their IPs. Like if you watch the Ubisoft Forward stuff, like they are really at this point just like backed into a corner on their IPs at this point. Like it was Assassin's Creed all day long. That's all they had, like Assassin's Creed and Tom Clancy stuff. And that's it. That's all they have. Like at this point is those two franchises for the most part, outside of the Mario Rabbids thing, which is cool, but that's actually playing more off Nintendo's IP than their own. Yeah. Because like I enjoy Rabbids, but I don't think anyone's buying that for the Rabbids. They're buying it for Mario more than Rabbids, right? And then, I don't think anyone cares that much about Just Dance anymore. And the Rocksmith Plus thing, from what I've heard, is just kind of a big flopola. And so they're really at this point just leaning that. So I think as long as they don't make a Assassin's Creed blockchain game, like they're probably fine at this point. And I think that's the big thing, is like the worry is tainting your IP, is I think their biggest concern. So if they do it with new IP, do it with whatever, I think they can get back into that. And I think they still want to. I don't think they've like backed out, but I do agree that like saying we're researching it was definitely a backpedal. But as a company, like they have a lot of trouble moving stuff forward, having personal experience working with Ubisoft in the commentating thing. And I don't mean this as a knock against them, but they really struggled to get into esports. to work on live games because their entire business model was built around making these AAA games and then occasionally selling some DLC and then making sequels. And so they had this process where like they build a game, move the team on to a new game afterwards, right? Like you have a skeleton crew for DLC, that's it. And so then when they had to do live games, they'd be like, oh crap, well, like we've got to keep some people here. We can't just ship them off to the other game, and like just all these internal problems. And I bring that up because like that's a thing that's going to come with blockchain too, right? Like you've got this thing where we hear about like when Quartz got pushed out, all these people in Ubisoft were like, I don't want to be associated with that. I think that's stupid. Like that wasn't my decision. And so we're going to have a thing like if they actually do start doing some blockchain games, like they're going to have to shift internal processes. Like people are going to have to work differently. And those have to be live games to some extent as well. And so I think with AAAs entering the space in general, it's going to require a lot of shifting parts around and stuff. And so I'm really interested to see, for example, when Zynga kind of makes a big splash because now they're under an even bigger company. They were still a big company themselves. They're not as agile as they used to be. I don't know. I'm really interested to see this overall storyline.
Yeah, I'm glad you mentioned Zynga. There's something interesting about the timing with Ubisoft as well. So Ubisoft recently got another pretty substantial investment from Tencent. I think Tencent now owns 49.9% of one of the entities. There's a little bit of a structure to the company. And
I think it was buying from the Gilmont brothers shares as well, right? So that's kind of buying into the more of the root of the company.
Exactly. And what I've been reading a lot of on Ubisoft is with this partnership with Tencent, there's actually been a growing focus on mobile for them. And I do wonder that whether or not, in a time where a lot of these public companies in particular are getting hit pretty hard, and a lot of these kind of like top tier, but they're not the full size whales in the ocean of gaming, are trying to maybe tee themselves up for some kind of acquisition. We saw this with Zynga getting acquired by Take-Two, and whether it's an acquisition by another larger fish in the gaming world, or just kind of caving into what Tencent wants them to be for a full buyout in the future. I think they're probably just more focused on core strategy, and I think Web3 is probably taking a little bit of a backseat as they tried to optimize for some form of acquisition or future investment, whatever that looks like from Tencent or others.
Given their experience in mobile and their inability to shift towards live games very well and stuff like that, I don't see that going very well for them. Like I remember Tom Clancy's Elite Squad was an interesting game, but ultimately failed. They've had a number of other games that just haven't done all that great. Mm-hmm. And now they're bringing over the big IP like Rainbow Six Siege, The Division. They're really trying to go all in with it. And while I'm sure some of the overall like work being done because it's being done with Tencent and things like that, it will be decent. I just worry that Ubisoft themselves is not fully capable of handling that and will have to defer more and more to Tencent or companies like Timmy under them with that experience to help bring that IP over. And then it becomes like two Ubisofts. You've got the one just, playing the existing franchise game on consoles and PC. And then, essentially the mobile division basically based out of China at that point. And of course, if we end up in some geopolitical situations with China, then there's like half of Ubisoft kind of paralyzed at that point. I feel like it's a big risk, but I understand what you're saying, like in that they kind of are like running out of runway in what they were doing before and looking for maybe a brighter future in possible acquisition, or at least, looking at Tencent to be like, please help us move forward. But it feels very risky for a company that's like, that has so much strength in their IP and their other things that have just really kind of lost their way to some extent.
It is fascinating to me how Ubisoft has an accelerator, or like a new technology accelerator program. And you know who came out of there? So Rare. You know who else came out of there? Sky Mavis. And so they've actually worked with these teams years ago. They've put out these companies, like these are probably the two of the top 5 biggest blockchain gaming companies out there. And those have worked with Ubisoft, and those were helped by Ubisoft. And it's so interesting to see how little leverage they've gotten from that, or how little they've learned, or because they also don't even have a stake in it, right? It's like it's almost free to come do it.
Their R&D stuff's great. I love what they do with their R&D, like the pushing stuff forward constantly. Like Stadia was basically built off the back of Ubisoft's experiments, and like Ubisoft Plus on stuff on Stadia was helped carry the few AAA games that get released on it.
Yeah. So the head of the R&D department, it might be not him, but so there's Nicolas Pouard, who's like the blockchain guy at Ubisoft. So I was gonna record with him like a few weeks ago, and he told me like he had to cancel because his CEO he had to help his CEO, and that might have been related to this. And so the recording isn't done yet, but I'll be sure to ask him some tough questions about what the hell, man. You've worked with these teams, you've done some fantastic R&D, and look where you're at now. So good. Let's see where that ends up. The next topic I'd like to mention or ask about or talk about is a question that we had from one of our members. Do I actually find his name? Do you guys look for his name in the Discord? In the meantime, I'll read his question. So, quick operational question on something I don't entirely understand. Do NFT sales, primary and secondary, accrue directly to the team treasury? What do most teams use the NFT sale income for? Is it for paying expenses such as the team or buying tokens or other? Do gaming projects pay developers and team via NFT primary and secondary sales as well as via token lockups? Do teams record separate line items for protocol revenue and NFT sales on a quarterly basis? Any projects that publicly show this activity on their treasury or elsewhere would be greatly appreciated. So for me, this is a kind of broader question about like NFT-based or like blockchain-based business models and like blockchain games-based business models, and fundraising, tokenomics, I guess also. And accounting, which I like that last part. I don't have a lot of insights in. But do we know the name of the question?
Yeah, it was Will 32.
Will 32. Shout out. So yeah, let's talk a bit about what we've seen in regards to this this question. Devin, you've worked with a ton of companies doing this. What do you see?
This is something I think about a lot as well in just terms of business models and revenue and even kind of the accounting side of things, because right now everyone's just kind of stumbling through it and kind of misthinking about things. So it's really interesting to see like this kind of evolving. So I feel like at first everyone just did everything in tokens, treated tokens as money, and that was kind of like the way things went, because it was like, I feel like it almost was like a legal thing too. You were able to get away with a lot more stuff when you were treating tokens as money and like not involving real money, because that avoided a lot of legal and accounting things. And then, you have stuff like NFT pre-sales, right? And it's like, there's a couple different ways those can go. It's like you can use those as, and we've gotten into the cons of those as well, of course, previously, but they, it could come in as a form of cash or as something that you're selling for your token. So like an example, that was like Illuvium, right? Where a big portion of their land sales actually came from their token more so than ETH, even though you could do either or, right? And that actually ended up burning a huge amount of their game token. And so you could argue like how much of that was really revenue then, depending on how those game tokens were acquired and things like that. And it's tricky too, because most of the time, even when people are doing the sales essentially for what you consider cash, it's still coming in a form of token, right? No one's really like taking credit cards for NFTs. They're taking like ETH or at best USDC or some other form of abstracted money. So at the end of the day, like, in order for it to become something that people are using as money, is either in their accounting, like for their treasury, for paying developers, for repaying investors, whatever it might be, that has to be converted back to cash in some form or another in order to do that. And so that's where it becomes like complicated with the accounting. As we know from like anyone who's tried to do taxes involving crypto stuff, it gets very complicated because you like have to go like, so if someone pays you an ETH, right? And you go to report, like you go to cash out the ETH to whatever to pay the bills for the company, repay investors, or whatever you're using it for. How do you decide what value? Is it the value that you cashed it out at? Do you have to report the profit between the time you got the ETH and the time that you sold the ETH? It's a very complicated thing. But at the end of the day, like there is a certain amount, I think that like typically these NFT sales are often paying people initially, at least. They're some of the runway for people that aren't getting fundraises. Obviously, if you get a fundraise, that's a more direct form of finance. So a lot of people will get a lot of NFT pre-sales and kind of sit on that and try and get the fundraise money, right? And I'm sure you guys have seen that because you guys are often doing that, right? Giving them that fundraise money. And then they'll use that as their cash on hand, essentially to have their runway to go through their burn and keep the rest as sort of more of a reserve or like whatever else they want to do with that money they got from the NFT pre-sales, and treating the NFT pre-sales more as a validator for the fundraising, right? Rather than treating it as a cash flow. But it varies a little bit because you see some people like Sky Mavis that tend to treat AXS as if it were money and frequently referring to it in dollar terms and things like that. But they're using it to pay out as if it were cash. They're using it to get in as if it were cash. And so people are treating it as this sort of like liquid form of cash, but not always converting it back to that. And I think people are definitely, to answer one of the other questions, definitely using tokens or governance tokens or other kind of sort of locked up sort of tokens that are normally for investors as a way to also pay employees sometimes. So it's similar to the idea of like, startups where you get paid in equity, stuff like that. It's a very, very similar idea. Like they're treating it like it's a startup going to fundraise. They're giving people tokens saying they'll be worth X amount. And you don't necessarily go public the same way in terms of like the way that those vest. But then they still usually do have a lockup period. So you will often see, and you can usually tell this, right? It's very easy if you look at someone's white paper and their tokenomics distribution and you see like a team section or developers or whatever, like that's where people are getting essentially paid in equity.
So one way this is done that I've seen a few times, which I think, just makes things kind of simple, is you have two parties. You have a operational company, and then the other party is the DAO. And so the operational company is pretty much the people, all of the people, the employees that work there. And the DAO is essentially like the treasury. So where the revenues from the game get accrued, and where the IP lies often, or it could be in the first company as well. That doesn't really matter. But the way I see this work is twofold. So the DAO is governed by a governance token. The company owns part of the governance token. Part of the governance token is owned by the investor. Part of the governance token is owned by, the public. Essentially, like, the pie chart that you can see on white papers, that's like, the distribution of the governance token. The NFT sales, the revenue of that is kept in the treasury, which means that, the team partially owns part of that, like the revenues, like let's say 1,000 ETH is raised, If you own 10% of the governance token, then that means that you own 10% of that 1,000 ETH, and you can choose what happens with it. If you own 1%, it's the same thing. All of the revenue from the protocol, so if you build a game where there's like trading fees and royalty streams, those go into the treasury, which means that, as there's more revenue accrued, that goes into that treasury. And theoretically, if you own a percentage of the governance token supply, then you own that part of, like, that fraction of the whole treasury. And then there is often a agreement between the operational company and the DAO, which, for example, says that, okay, for like development services, so for development of the game, we're going to pay maybe, $500,000 or like $1 million a year, for example. And so that means that every year, $1 million, or like every month, like, $80,000 goes from the treasury to the operational company. And so that's what I've seen as a pretty strong distinction. And so the teams are being paid for their work, and they're incentivized to optimize the total value of the treasury and the token by holding some of that token.
Yeah.
Anyway, so that's how I've seen these things work. Hope I did a decent job at explaining it.
Yeah, it does introduce a new wrinkle that I think hasn't been common to traditional capital raising, either directly through investors or crowdfunding, where you're effectively only getting a portion of what you're raising sometimes through these primary sales, where like if a team owns 25%, you may be getting 25 cents on the dollar of certain inflows. And I think that's something that we've seen be a big challenge for a lot of companies over the last year, where it introduces this factor of treasury management, which a lot of times I think startup founders don't actually have to deal with. This is more of something that like capital allocation comes through for larger companies, public or private, where you're managing maybe billions of dollars in cash and you're trying to figure out like what should be allocated to short-term investments versus cash and cash equivalents. And that's putting a big burden on startup founders that are managing $5 million. And I think we've seen this in a couple cases where, the Ragnarok situation that happened within the last month, like treasury management kind of burned the company's capital allocation and what they had available to build a great game and to support their team. And so, yeah, I think it does throw a wrinkle into the capital allocation strategy, and one that is kind of new to most people that are having to deal with it right now.
Yeah, it's weird
But
to
I
say
think
like
Nico, great description of how
yeah,
it flows.
absolutely. And then to what Nico was saying, it's like it's sometimes strange to be like, well, we can't pay you directly, but what we'll do is we'll give you ownership of a treasury that you manage. So we're not giving you that money, but you get to manage it. And that's such a weird thing to say. Like, you get to decide what happens with it, but you probably shouldn't decide it goes to you.
Mm-hmm.
So like that's what we're paying you in, and obviously like there are other alternatives to that, but that seems like the weirder way to pay people for governance over money they can't have as their sort of like reward. And that's kind of a weird way to like people need to eat. Like that's kind of, I don't know. I don't see that being like a great long-term thing without some other form of compensation as well. Or people are going to start to look like shareholders that get really, really greedy at some point and start to find ways to funnel the money out through proposals. Or we're going to start basically so imagine I'm one of these shareholders essentially of this treasury, right? And I'm like, God damn it, I need some money. I'm like not getting money out of this. I can manage this. I can manage proposals. I can get people to vote for stuff, but I can't just cash the damn thing out at an ATM. And so I'll set up a shell company that's going to be a developer, and I'm going to basically get voted on a proposal that's going to allocate a whole bunch of this token over to my shell company to pay them to essentially develop whatever. And that's how I'm going to get my money out. And I imagine stuff like that will come up. Like people will find ways to use proposals because it's like it happens all the time in real world government and real world business, lobbyists. Like there's all kinds of stuff like that happens, even when it's not straight for money, it's just for favors or whatever else. So I imagine like there is going to be a huge temptation for that sort of thing when people are governing money that probably shouldn't be governing money. And because we're just kind of giving it to whoever, it's just a token. I could just buy it off the market. Like I could just go to the market and have some partial control over a big vat of money with no real resume required, like that's going to be a bit of a problem I see without some guardrails. And that's why, of course, like, real world corporations, we have a whole bunch of stuff and regulations and SEC and things to kind of like regulate that. I'm not saying they always do a great job, but that's part of why we have that stuff is because people will do some shady stuff and they still get away with shady stuff, unfortunately. And SEC is kind of like half the time, like half an eye open at best. But I anticipate that being a bit of a problem long term.
It's clear that around treasury management, there's not as many guardrails as there is around like traditional treasury management for like big companies. I've seen some drama within the Web3 space, not the gaming space, but the more DeFi space, where the founder of a protocol they had raised like multiple millions of dollars, like tens of millions of dollars, and so they were paying themselves like 150K a month, like the founders. Then they also gave themselves a bonus because they sold out like a governance token, and they gave themselves like a 600K bonus. And the dude was actually like speculating with the treasury on like price movements, and he ended up losing like $10 million on top of the amount that he paid to himself and other friends probably that he had. And so there was a huge community backlash, and he was like, "Yeah, sorry, I made a mistake." But
sorry.
Yeah. Sorry,
well,
guys,
that's an interesting thing with all the token raises that have been happening too. Is like if you sell your tokens and you exchange for ETH and you just have a bunch of ETH sitting on your company balance sheet,
right?
Your $10 million raise may be worth a fraction of that, depending on when you raised. If you just if you didn't convert it to fiat, and it's one of those situations where prior to call it spring of this year, sitting on crypto rather than converting it to fiat was expanding your raise. You might have raised $5 million and then you were sitting on 6 or 7, 7.5. Now it's the reverse, where you might have raised 10 and now you're sitting on 4. And so
stable coins will definitely be an important part, I think, of treasury management in the future.
Yeah, for sure.
And there are also companies that offer services. Like I haven't seen this happen like directly, but I know it happens is if you own a token that's locked, even for like 2 more years, there are people who are willing to buy a a promise that you'll give them your luck token for a certain amount of money at obviously a discount.
Isn't that like stock options and stuff like that essentially?
Yeah.
Pretty
It's like a
much, yeah.
futures
But I mean,
contract on a token.
Right.
yeah. So these are financial products that exist, and essentially like you're trading around risk, right? If you're like, look, we invested in this token, it's still locked up for 2 years, but it did 100x. Like I'm happy getting a 50x for sure in 2 years, right? And then someone else takes the risk of potentially that token like halving or even worse. So all of that stuff happens.
At the end of the day, we're almost going to turn this into a global stock market that's like somehow going to supersede all the localized ones.
Dude,
because like people are going to keep coming up with these derivative things, like these different ideas based off ideas. Yeah. Because that's what people do in the financial world. They find ways to turn money into other things that they can turn into other things. And the instruments become more and more abstract instruments because people find ways to, as you said, like transform risk into an instrument, or these other ways of like just taking an idea almost around money and a promise and like turning that into something. And that's kind of like just one of those forces of nature that like financial people are going to push. And you've seen like the success with DeFi, and I'm like, you take DeFi versions of that, and then all of a sudden you don't have to worry about it being a government-based thing anymore, and suddenly it's global. And I can see that really like over time, maybe superseding, like maybe we do really have DAOs as part of corporate governance structure and other weird stuff at some point.
So the point Nico made is really interesting because it basically nullifies the effect of lockup periods for a lot of investors, where you can sell without transferring the ownership. I think there's two kind of interesting things that can happen here. One is, what if the buyer doesn't exist at the time where the transfer is supposed to take place? Like, you know, if you're in like a 30 euro situation where the capital that was supposed to buy your tokens at the time of transfer, the time you agree to transfer ownership, once the lockup expires, if they're just not around anymore.
It has to be like contract escrow or something.
Yeah. What happens there? And B, I'm interested in, I haven't really seen many of these up close, but I'm interested in the mechanics of how these contracts are written, because I could see a world where certain investors that are trying to play shark look at these opportunities, and depending on how the contracts are written, like if there's clauses around material changes to the business, if these are like call options eventually where the contract date gets there and people are like, oh, according to our contract, this, and this have happened, and therefore we are no longer obligated to buy them if it's not doing well. And if it is doing well, they take their upside. So I think there's a lot of tricky situations I think we're going to see in the next few years as these things play out, where the buyer may not be there, or the buyer may have inserted something very, very tricky into the terms.
Yeah.
Well, it's like even the stuff where you take staked tokens and you basically get a receipt token, and then people start doing things with that receipt token, and then they generate like stake those and get like receipt tokens on
Sounds
those.
like the banking system, Devin.
Yeah, it's crazy. It's really crazy because like we're just replicating it all over again.
Yeah.
Because like I said, it's like a force of nature. People want to do this. People are going to start doing this in games. You know, like this is going to be like, so many people are taking inspiration from DeFi stuff into their games that like we're going to get. We see, like before we couldn't really make games that were really financially driven and in terms of like touching the real world so much. You know, free to play kind of broke that a little bit with microtransactions and stuff. But now that we suddenly can like have games that can reach out essentially into the real world financially wise and impact things, and like that stuff's going to start really bleeding into games, I think, and being part of the games. And like, you know, we talk about like, for example, in EVE, when we're like, oh, there was thousands of millions of dollars worth of spaceships blown up in this big epic battle. And like, we're going to be talking about something similar, you know, 10 years from now, but it actually really is essentially that money and not just, you know, like a figment of our imagination that it's worth that much.
Yeah, it's okay. If you guys want, let me know. I can pitch my vision for finance in 20 years, which I call the DeFi matrix. I didn't come up with it myself, 100%, but given like where this technology is heading, what it looks like in 20 years, we can talk about that if you're interested. Good. All right. I guess our last topic, BLANKOS Block Party launches on the Epic Game Store. Is there what's the big deal here? This was announced a while ago, right?
Yeah. We actually talked about this a little while ago when it was announced that this was going to happen. I think, you know, this is a pretty quick topic. It's basically BLANKOS will now be live on the Epic Game Store, and initially it was a big deal because historically distribution has been so fragmented of Web3 games. This is one of the first examples of a Web3 game, Web3 native game sitting alongside a ton of other traditional content. And I think it'll help with the discoverability of Web3 games. It'll be interesting to see how they onboard this in critical mass to those players that might just stumble across it in the Epic Game Store. But I think it is a sign of like almost a little bit of like a maturation of the Web3 gaming ecosystem, that there are now titles sitting alongside a ton of really compelling and respected traditional titles.
Yeah, unless I missed something, this is the first actual release of a crypto game on the Epic Store, and I feel like it's a shots fired moment against Steam, against Valve. Not too directly, right? Like it's not like Gabe's going to be fuming over his third lunch or whatever, but it's definitely a situation where Epic is still kind of like moving into the territory where they're offering something different, and where they're actually showing that like they're a bit more open to different things, that they're, and I think it might be a signal for a feeding frenzy for other Web3 games though, where they start going, let's all get on the Epic Store. And all of a sudden they have to fight off a bunch of like, I don't know what the approval process is like for getting on the Epic Store. Like I remember when Steam had the green light thing, but I'm not sure how it works for Epic. And so maybe it's not a big deal, but I imagine a lot of games are going to look at that and go like, I should try and get on there now.
Yeah. Like we already saw that with Grit from Gala.
Right.
I think that was the second announcement, if I remember the order correctly.
I think it was the first announcement, but the much later to be released than BLANKOS.
That might be it.
Yeah, I'm mostly curious to see the users, like how many people actually like start playing this, like if there's a big change. I guess because that's in the end the most important thing, right? Like if you're on the
Epic Game Store, if they promote it, it will go up. Like if Epic promotes it on the store, then the numbers will go up. Like I think that's kind of a given. It just depends on if it gets promoted or not.
Yeah. Let's see. Good. All right, that's it. Thanks, Devin and Phil. One quick thing, we if you're in our Discord, in the podcast discussion channel, where I mentioned that we're going to introduce two new segments. So first segment is called FogDAO Founders, where we get a number of like early stage founders on who are building within the Web3 game space and have them share anecdotes, experiences, tips and tricks, failures, mistakes about doing this, because there's still a lot of unknowns, and I believe we have some amazing talents, some amazing people that have a lot to share. So that's segment one. And the second segment is the nerd in me coming out and wanting to learn more about on-chain games specifically. And so we're going to do like an on-chain games highlights, where every episode we are going to talk to the creator, the builder behind one of these games that live entirely on-chain. And to see what we can learn from that, because this might be very niche, but it also has potential. I still want to believe. So let's see where they innovate. And I think there's still a lot to learn for games that don't necessarily want to be fully on chain. So that's it. Cool. All right. Thanks, Devin, Phil. Thanks, listener. I hope you enjoyed. If you did, feel free to share this. If you're listening to this and you're not yet joined our DAO, then go to thefutureofgaming.wtf, and then your GMI. Absolutely going to make it. Cool. This was it. Look forward to speaking to you next week. Ciao.